Hello, everyone, and welcome to today's panel on emerging managers and starting your own firm. Thank you all for joining us today. I'm Atara Charnoff, a principal on GSAM Grosvenor's private markets investment team. I specifically sit on our diverse manager team focusing on investments in women and people of color. I also specialize in small and emerging managers, which we'll be speaking about today. I have with me a panel of two sponsors as well as another investor to go through some questions that might be top of mind for some of you in our audience. And we'll start off with introductions. David, can you please introduce yourself?
Sure. Good afternoon, and thank you, Atara, for leading us. My name is David Perez. I'm a founder and co-managing partner of Avance Investment Management.
Melanie, go ahead.
Hi, great. Good afternoon, everyone, and thank you, Atara, and the rest of the panelists. My name is Melanie Brensinger. I'm a founder and managing partner of Anagenesis Capital Partners.
And Dominic, do you want to introduce yourself?
Yep, that's perfect. Thanks again for coordinating everything. Looking forward to the panel. So Dominic Ceci. So I'm an executive director at LGT Capital Partners, focusing on U.S. primaries.
Great. And to get started with our panel today, we know that the foundation of every firm is the team, and building the team is really the key part that you think about when you start to build out your organization. How did you each choose your partners and build out your team? And maybe you could give us a few lessons that you learned on the way as well. Melanie, can you start us off?
Sure. Thank you, Atara. I think choosing your partner, if you're out choosing a partner as a founder of a firm, is probably second to strategy, the most critical decision that you're making. I think oftentimes people choose partners because of track record or deals or maybe shared strategy. But what I've experienced over time is that it also really comes down to the long-term vision that you and your partner were planning to share together, how you all think about succession of your fund, how you think about strategy, how do you think about what's important to growing the team. And all of the cultural things that interplay in a partnership. And then also just understanding that founding a firm is hard and there's going to be a period of time that's really tough. And I think having a partner that also, as I call it, has their personal house in order and prepared to really bear down and take on that risk and do what it needs to do to found a firm, I think is really critical. And so taking time to find the right partner is really important. And also every additional team member you add after that first partner could also really change the culture and the environment of the firm. So I really think it's as much as track record and all that's important, the personal dynamic is also super important.
And with you saying all of that, what would you say were one or two of the key things that stood out when you were picking your partner, starting up your firm?
I think for my partner, he had previous experience in fundraising, and he also had previous experience in, I guess, organizing a fundraise and dealing with investors and whatnot. That was not an area of expertise of mine. So his skill set was really complementary on that side, and my skill set was really on the investing and healthcare expertise side. So I think finding someone who has a complementary skill set, but also gives you a diverse kind of experience is also really helpful.
Yes, it's always good to have a bit of balance when you're starting out your partnership, especially if you're adding some people to that mix as well and building out the culture. And I know, David, in addition to the usual building out a firm challenges that came your way, you actually started your firm in a virtual environment, but you did have the helpful piece that you had already known your partners for quite some time. So can you maybe give us a little bit on how you decided to work with your partners and spin out of a fund, as well as what it was like building out your partnership in this environment?
Thank you. Yes, we were, in our case, the firm was founded by three founders who had worked together for quite a while, over 15 years or so. We had, great opportunity to learn a lot. We worked at a great firm and had a great time together helping build that firm and developing as investment professionals. So we knew each other quite a bit, which was very important. As you mentioned, we've most of the time that we've grown this young firm has been during a pandemic, so we had to adjust to this new environment of building a firm almost virtually. So the foundation was there. We felt very comfortable with each other and with each other's strengths and fit. I think the challenge, if you were to ask me, and the lessons learned, was how to assess not necessarily skills, which are areas that you could sometime assess through how you speak to people, how you assess their experience, but culture. And that the challenge to us was how to build a firm and to where you can have the right culture fit in the people that you hire. And that we found, and we're still learning how to assess culture through Zoom. Now we're in this sort of a post-Zoom era. We've had opportunities to spend more time with people in person. But that's been the biggest challenge. How do you move away from just skills to get to spend some time with people, get to assess the culture with people who you have not necessarily worked with together. So we've learned a lot, Atara, over the last year, and I think a combination of Zoom interactions, skill assessment, but then spending time with people and getting to know them is what's really worked for us.
And you mentioned that now we're in the post-Zoom world and you've gotten to do things in person. What has it been like now that you're together as a team, not virtually?
Yeah, it's been amazing. I mean, this background that you see here is our new office in Midtown. We've been in the office since April 1st. We started the office here April 1st. We have an office in New York, an office in Miami, trying to really, catch up with each other. I mean, what most of us don't realize is that, after a year and change and in your bedroom or at home on Zoom, some of these relationships that you took for granted needed a little maintenance and a little strengthening. So we're trying to catch up and spend time with each other. Everyone, we didn't make coming to the office mandatory. It was voluntary, as folks felt comfortable. And what I will tell you is that everyone who can is showing up at the office, and since April 1st, and I'm thrilled because that's allowed us to really assess and build the culture and strengthen the culture that we want to build, both here in New York and in Miami.
That's great. It sounds like you're off to a strong start pretty quickly. And thinking from the investor side, now that we've heard from both of our sponsors, Dominic, how do you think about funds that are starting as a spin out from another firm versus building from the ground up? I know from our side at GCM, we focus a lot on the connectivity of the partners and the deals that they've done together, but it'd be nice to hear from another investor as well.
Yeah, absolutely. And it's definitely not an easy question, and there's not one size fits all. We try not to be too strict and only targeting groups that have been working together for 10 plus years and attributable track record. But we really look at what you mentioned on the connectivity part. Have they partnered on deals? Have they worked together? They may have different business cards, but they were essentially working together for quite some time. And I think in the initial meeting and even in deeper diligence, we do try to ask the probing questions and just to understand how the partners respond. Do they come off as cohesive? Is one more dominant? Do they come off as disjointed? And try to understand, are they complementary? Just to understand how they're going to gel together, because as they're starting a firm, I think everybody's trying to work things out real time, but we're trying to understand maybe from a third party perspective.
Makes a lot of sense. We want to make sure they're really building the foundation of the organization correctly and starting off on a good foot. And in addition to building out your organization, of course, one of the focuses early on is how you're going to raise capital and what your relationships with both LPs and third parties might be when you first get started. And David, could you maybe give us an idea of how you think about building relationships with LPs and how you go about that?
Yeah, I mean, certainly, raising capital is the lifeblood of starting a new firm, of course. And so building those relationships and getting the support of LPs is the crucial first step. And from our perspective, again, it all came together during the age of Zoom. So all the meetings that we've had, 100% of them have been meetings over Zoom. So it took quite a bit of adjusting, Tara, to learn how to read people. It used to be you got to read the room. Now you have to read the Zoom. So it's very different. You're not next to people. You can, there's always a lag and harder to. Plus, you're looking at yourself, which creates a self-conscious part of the interaction. But what I would say that's worked for us is going back to the same principles, which is that raising capital is not really a transaction, is building. You have to think about it as building a relationship. So less, when you think about it, what's the objective of a meeting with an investor? It's probably not to get capital, is to have another meeting with the same investor in a period of time where you can tell him or her about the progress that you've made in the time. What are the things, whatever you promise, make sure you achieve and build trust. I mean, at the end of the day, particularly in private equity, you're talking about 10 plus year commitments. So those are long relationships, and generally you only get there if you build a certain level of trust with that investor. So how do you approach trust building in the Zoom era? So one of the things that we did is try to talk less about yourself and your firm. Try to engage as much as you can in a conversation. Make it reciprocal. Try to learn about what that investor is looking for. What are the things that they're seeing in the marketplace, best practices, and have the message about yourself being more succinct. So we shorten. This might sound counterintuitive, but we actually shorten our presentation to be very short, less than 10 slides. And if it was an hour Zoom, I would set it up so that we can go and cover what we wanted to cover in 15 minutes or less. So engage. What worked for us so far has been use the time to really have a conversation where you get to know that person, they get to know you. Use, if you can, about half of your time or 40% of your time and that. And obviously you want to cover the merits and the things that you're doing, but really use it. The goal, again, is to have another conversation in a couple of months, in a few weeks, depending, and learn about their process. What are the kind of things that when would be the right time to have a more definitive conversation? At what stage of your company building would you really be a viable candidate for them? And always think about it. You always, when in those conversations, hypothetically, of course, we don't, in those conversations, you're always thinking about you're raising your next fund. You're not really trying to get a yes or no answer from a Tara or from Dominic. You're trying to build a relationship with both of them that would hopefully yield a partnership at some point.
I think that's very good advice. As someone sitting at the other side of the Zoom, or as another square in the Zoom, I definitely agree that sometimes if the content is shorter but crisper, it's appreciated because it's the one that you remember when you're having 1 to 2 manager meetings a day, and sometimes new managers, and sometimes also managers that you've known, but you're getting updates as well. So it's a lot to keep hold of, and in building a new relationship, it's always good to be the one that stands out in that way. And Melanie, I know you also stand out in a specific way because your firm partnered with the SBA, and that's a type of partnership that not every fund has. And it'd be great if you could maybe run us through your thought process on partnering with them and why you thought it was advantageous to your firm.
Sure, great. Thanks, Tara. I would just note too on what David was saying. I think what's interesting for particularly first-time funds who are funding working capital for their business, unfortunately on their own checking accounts for a period of time. I think that the evolution of Zoom and people getting comfortable with Zoom could be really interesting, because one of the biggest expenses out of the gate is travel, as you're trying to build a firm and traveling around and meeting LPs. So I'm encouraged a bit for other funds that come after us, then maybe some of that will be transitioning to Zoom and will help them a little bit from an expense perspective before they're able to get commitments. So we'll see if Zoom is here to stay with LPs, but I think that would hopefully be the case. As it relates to the SBA and doing an SBIC fund, initially we were considering raising a more traditional fund. And in fact, one of the folks that encouraged us to look at the SBIC was Grosvenor. And they suggested we should look at the SBIC program. We're focused in on the healthcare space, lower middle market healthcare. And they thought that the SBIC program would be a really great avenue for us to found our firm and build our first fund. And so once we started to talk to the SBA, we really enjoyed getting to know the team at the SBA, and we stood out with the SBA for two reasons. One, we were healthcare focused, and two, obviously, as me being a 50% owner of our firm, having a female as a GP was also intriguing from an SBA perspective. And then our track record and our strategy spoke for itself. So we really like our relationship with the SBA. We like being an SBIC. It's advantageous for first-time funds. And you do have to go through a licensing process. But once you go through a licensing process, the leverage coming from the SBA is quite attractive. And the folks that are around the table to invest in SBICs is a little bit different and unique from a more traditional fundraise.
Time to ask to maybe give us a little bit of his perspective from the investor side on these types of partnerships, and also just generally how you think about GPs and LPs partnering in the early stages. To give perspective from the GCM side as well, I know that we like to be early. A lot of times we're the first institutional meeting that a lot of funds are meeting with, and kind of even giving us a draft of their first presentation, and we go back and we talk to them about that. But maybe moving on to when you're kind of focusing on the funds during a diligence stage, what do you focus on with LP and GP relationships when you're first looking at a fund?
Yeah, absolutely. I mean, the first and foremost, I think just having an open and honest dialogue is refreshing from our standpoint. We prefer to have it to be more of a conversation than sit there and being pitched, because we've often seen a bunch of these situations before, and we can try to be helpful as well. I think or even more involved in a bunch of first-time funds that we've backed than, let's say, the funds 5, 6, and 7, and it benefits all parties. So I think just having that initial open and honest dialogue as well, and even once we do get the fund started and we're LPs, focusing on alignment on that as point, again, the open and honest dialogue. I think there will inevitably be a situation where even us on the LP side will have differing views and opinions, whether it's recycling provisions, credit facilities, new strategies, or maybe pivoting a bit. But just having that dialogue and understanding other parties and where you're thinking about it is just helpful, just to get ourselves comfortable and just be able to get the right middle ground from a decision-making perspective.
Yeah, I agree with all of that. And to even add to what you're saying in terms of the honest and open dialogue from the beginning, I think one thing that we always tell new investors or new funds raising is that if there's anything in your backgrounds that we will uncover later on in the diligence process, a lot of us on the investor side have operational due diligence processes and look through your background. So if that's something that might come up, we'd rather hear it from you first rather than dig it up later in the process. But also in terms of transparency, understanding who else is looking at you and other people that we can talk to as well is always helpful. Reference calls, especially in this type of environment, and giving us more people to talk to is always helpful as well. And kind of expanding on this virtual world and presenting yourself a bit on what David and Melanie were touching on before, as well as Dominic, in terms of it's pitching on Zoom. But how are you all, David and Melanie, relaying your backgrounds, or how did you when you first started your firm, to give a really crisp idea of who you are, especially because you both mentioned maybe shortening the time period? How do you relay that information across? David, you can go ahead.
Okay. So, I mean, in our case, I mentioned we had, I have been in the industry for, I've been in this industry now for 25 years, and I had worked at a prior firm for close to 16 years. So I think, we were fortunate that we had a lot of folks who had known us from the industry and networking events. I had been pretty active also with some organizations that support diverse managers. I had been the chair of the NAIC for years and on the board and so forth. So I and so benefited a bit from just knowing some folks that knew me. So didn't need as much of that formal, so folks just knew what the tenure that we had, not just in my case, but the tenure of the three partners working there. So it was more of that. It was more of networking and participating in events like this for many years and getting to know folks. I think that was invaluable in building the reputation and the contacts that enabled those conversations.
It is a very important thing to continue building out your network in this industry, a primary way to start out with building your fund. And I think one thing that we focus on, in addition to your backgrounds and building out your team, is, of course, touching on your track record as well. And as a new manager, building out your own reputation outside of your old organization, it can be a little bit difficult sometimes to describe that. Melanie, could you maybe give us a little bit on your experience doing that and give the audience an idea of what you went through there? You're on mute, Melanie. You're still on mute, sorry. Okay, in the meantime, Dominic, do you want to give us an idea of your side of the table as well, and what you're really looking for sponsors to tell you in an introductory meeting, maybe 3 points that you would have them touch on?
Yep. Yeah, I think the overarching theme, we mentioned it a couple of times, is just focus on the punchlines. I think there's more often than not, I've been in new GP meetings and even GPs that are on Fund 7, 8, 9, where you get caught up describing one minute part of the strategy for 40 minutes and then the rest of the presentation, and we get very little of the team and just other parts of the track record. So it's a bit of a tougher one for us to really assess and understand. So high level, just focus on the punchlines, and more often than not, if we as LPs want to focus on something more specifically, we'll likely ask follow-up questions and maybe spend an extra few minutes on certain areas that we're focused on. So it's really just letting the LP kind of guide where you want to dig into, but maybe touch on more of the high levels initially. And I think from the three major kind of takeaways that I try to get from an initial GP meeting is, first and foremost, is why form a new platform and how are you differentiated? It's definitely quite a competitive market out there. So just understanding your edge or how you differentiate yourselves is a key part to really stress throughout the process. Another one is more on just the best practices that you plan on kind of taking from your prior role, and even areas where you would prefer to maybe change, or some things that didn't work, where starting out with a fresh sheet of paper, you can start and maybe do a little bit better. And then lastly, really just the team. How are you expecting the team build out to look like? Oftentimes the team chart is a couple of managing partners or partners up at the top, and then a couple of empty boxes underneath. So understanding the vision, where are the blind spots, where you may need help, where you need to bring in some outside resources. And I mean, for a first-time fund, we often have to make a decision before the team is complete. So understanding that vision on where the team is expected in Fund 2, 3, and 4 is really helpful for us to understand.
Yes, I agree with all of that, and it's a very good overview on really what we're looking for when we're looking at managers. I think to kind of sum up what you were saying that we give to a lot of our new managers is who, what, when, where, what, and why. We need to know things about who you are and your background, what your strategy is, what you're focusing on, where geographically you're focusing, because sometimes you might not be within an LP's target geography range. Why is definitely why you have a competitive advantage. As I mentioned before, we see quite a few managers. And also when as well, which I forgot before, where what your fundraising timeline is also super important. I think that's a follow-up I give a lot, especially continuing with the way that we allocate capital. Our vehicles might have specific capital available.
If you all can hear me, I could probably answer her question about the track record. Oh, there you are, Tara. I'm asking if you can all hear me. I could jump in while you were finishing up, but you're back.
I'm not sure if everyone can hear me, but what I was saying, that we follow up on fundraising and understanding when we can allocate the capital. And
Great.
I understand that you all can hear Melanie as well. So Melanie, if the audience can hear you, can you please take us home just by touching for a minute or two on your track record?
Yeah, sure. Thank you. And sorry about that. I'm at a remote location traveling, and I'm apparently having some hop-in difficulty. So I apologize for that. As it relates to the track record, my partner and I came from different organizations when we founded our firm. So we had certainly done some deals together and had a few deals in our track record together, but we're not pulled out of the same firm. So that did present some challenges early on, where people wanted to make sure that we were a good fit, wanted to see that we've done deals together, wanted to see that we're thoughtful about our strategy. But at the end of the day, our anchor investors and our follow-on investors, as well as the SBA, did their homework around our respective track records and got themselves comfortable. And one area, because we are a healthcare-focused fund, that they paid particular attention to is what made the fact that we were raising a healthcare fund, how were we deeming ourselves experts in that industry, or why did we think that we could be successful in a niche fund? And I had been at GE for almost 10 years and spent a ton of time in healthcare, was 100% focused on healthcare. So I think that certainly helped. And since that time, we've built out our team with former colleagues of mine at GE. And so being industry focused, I think you certainly have to show why you think that you have the expertise in that industry to not only originate investments in that particular industry, but how you're going to manage it, what your network looks like, and just making sure that you're showing that you do have expertise and be thoughtful around the strategy in which you're trying to execute.
Great, thank you. And I see that we've gotten a message that we're out of time. Thank you all of our panelists for joining us today and giving us your insight. And thank you to everyone in attendance. This has been a great conversation, and we look forward to seeing you reach out to some of us after this panel. Thank you.
Thank you, everyone.
Bye-bye. Thank you.
Thanks so much.
Bye.